Let's have a little context about what just happened here last week in terms of moves. And I've got here a chart of yield changes by month. One set of bars here is the change from September to October. We just finished up with. The next set of bars, the green ones, are what happens next month, so October to November. In terms of big, large decline here, it's kind of interesting to see that this is one of the bigger declines we've had in terms of these orange bars since 1970. This is the largest decline going from Sept to October since 1970. This surpasses even the serious type of weather years we had here. You can go back here, even during the 80s, even during the two issues here from the 93 and 95. Kind of interesting to see the largest drop since September to October here since 1970, which are the orange bars. Also, thing I did point out here is I want to put on, well, what happens here when we do drop in these orange bars? What happens the very next month? And in terms of all these months where we have a 2% decline or more, the orange bars right here during the October month, what happens in November? Well, they drop it again. So we've got a chance. In this case, I put an average of all these 5 instances here, average of 3.2% drop. So if we actually drop the average of what they usually do, we could be down to 151 in terms of yield. Now at this point, I think that's a bit far-fetched. Like last month, I would have told you a drop to 155.8 would be far-fetched. So bottom line here is there's a good chance that USD will fulfill some of these people's dreams and maybe drop it slightly again next month. So keep in mind, that's what's in the trade mindset right now as well. In terms of another factor I want to point out, look what happened here in stocks since we started with our very first new crop number. We've actually dropped in half on new crop ending stocks since May, the very first number here. So kind of interesting. We have half the stock level that we started the entire year out with. Now, we got this 902 number, 902 million bushels. Let's put this back in kind of a big picture standpoint. This is the lowest on a market year basis since this 95, 96 type of year we've had here. Another basis that we all kind of watch, which is a little better, is called stocks to use. In other words, it measures, well, do we have a large amount of stocks or not compared to our current usage. So stocks to use, a little better measure of tightness, and this makes it look a little cooler here in terms of the lowest number since this 95, 96 year. However, this isn't actually the tightest number we've been at here. If you look at these numbers here, these are all based on the end of the marketing year, August 31st of each marketing year. However, throughout that marketing year, we know the USDA changes numbers up and down. This is the lowest number. This is what we put out on Friday here, lowest number since July of 2008. Once you look at these intra-marketing year numbers, and as we noted during this bar here back in the 2008 time frame, we traded these up to over $7. Both the nearby contract and also the December contract at that time. So bottom line for right now, we've got a little bit lower ethanol price, so we're saying 650 is a reasonable target right now for this December contract. So a little rough for us to actually accept these type of numbers, but 650 is the best we can think of for right now for this corn. Something I want to kind of point out here is for soybeans, there is no relationship between stocks to use and stocks, those type of issues, and what's actually going on with the price. Since May, we've had stocks kept almost unchanged, and yet during that time we had about $1.50, almost $2 rally in futures. So there's not a good relationship here as far as the stocks. We did drop them down to 265. Looks exciting as far as the chart goes, but on a historical context here, 265 still, still not tight. Just heck, last year, the year before were tighter. 2003 was another tight year, 96. So this is not a big panic situation for soybeans. So how do we price out beans then? Best job I can do right now on these beans is simply saying, well, the soybean-corn ratio, in other words, the fight for acres. As you can see here from this past year or so, it's been trading on the low end of about 2, high end, in fact, this is during the 09 period here. High end is about I believe that's 3.6 up here. So let's just kind of keep this simple and look at the past year or so. 2.8 with the high end of the past year. If we know our 6.5 is a projection for corn, that means possible $13 for beans. One thing I want to point out with these darn beans here is these beans are going to be dragged up They're not going to be flying up. This is going to be a drag up type of move that corn has to help pull the beans up here. On the wheat side, USDA did drop stocks. They dropped a little bit here, so we still have them under 900 million bushels. And at this point here, we have the trade saying, well, this is exciting, but on a historical context, we're at the high end of stocks still as far as U.S. numbers. Since, in fact, look at this, 80, 87, 88 or so. So we're still at the higher end of things as far as U.S. goes. Stock numbers for as far as a world basis, all we've done is we've gone from the high end of the range down a little bit lower. We're still very, very well stocked. One thing to point out about this wheat, 2007 was a very, very tight year. We've picked up stocks here since then, and we're taking a slight decline. In terms of prices, since that 2007 marketing year, which is between these bars, we had those very high prices. And as I said, stocks increased over the next couple of years. So prices fell, and right now we're just bringing it up slightly due to that small stocks decline. So wheat is kind of doing what it should be doing as far as stocks go. But in terms of prices, do we need to push anything past this 725, 750 range on a nearby contract basis? It's hard to see that actually happening. So for right now, we're saying, you know what, we probably will see this market rebound. 750 may be realistic as far as the nearby contract, but you have to have corn pulling things up right now. So as far as price projections, like I said, 650 for corn. We're changing our mindset to slightly bullish right now.